powered by Reviting, streaming from the Reviting Digital Studio. It's the David Daily. Exploring frontier technology, artificial intelligence, quantum innovation, and the intersection of faith, funding, and the future. Here's your host, David Goki.
Do you have a proven offer that people buy? Happy customers, but you are putting out content every week, spending on ads, and still not seeing revenue come in? Are people watching your content but not actually reaching out or converting? That's usually a trust problem, not a product problem. Most content keeps you visible, but it does not build the kind of trust that leads to real revenue. Reviting focuses on fixing that. In fact, Reviting helps you show up consistently through a weekly live stream on LinkedIn and YouTube, as well as other social channels that are important to you so that your audience can actually get to know you, hear you, and trust you. From that one session, we distribute it for you across podcasts and social media, your podcast, your clips, your social posts, and your emails. Everything is aligned and working together instead of feeling random. And this is exactly how you stay consistent, build authority and trust with your audience, and turn attention into actual inbound leads. In fact, this exact show was produced by Reviting. So go to reviting.com where you can check out pricing and sign up, or click contact and book a call. Thank you so much for tuning in. We're incredibly excited today on the David Daily Show to have another special guest today in a segment called Funding, Faith, and Future Tech. So we have Sonali V with me today, and I can't wait to bring her up to the stage. And we'll focus on funding, faith, and future tech. Sonali, welcome to the show today.
Thank you. Great to be here.
Fantastic. If you could introduce yourself and help me with the pronunciation of your last name, because I want to get it right, and just give a brief overview of who you are, your company, and who are the key people that you primarily serve.
Absolutely great to be here and great to have the opportunity to share what Augment Venture does and how we are part of the innovation economy and trying to really create value through the companies we invest in. We are an early stage venture fund investing in AI native companies that are transforming the real sector. They're really driving this AI deployment from analysis to motion to action. We work with founders who are creating new solutions and new products for supply chain, industrial system, and healthcare. The idea really behind Augment Ventures is my background has been in banking and working with early stage companies and taking them to NASDAQ. And when I saw that real sector is lacking in funding, and these are the systems that drive the world, I developed Augment Ventures to focus on these industries and really transform them, make them more sustainable, more productive, and more efficient. So really excited about the founders we've been backing for the last 15 years. And I hope through this show, I can reach many more of them and continue this work.
Wonderful. Absolutely love it. And reaching founders through this channel is perfect because we talk to angels, investors, and venture cap funds, primarily pre-seed up to Series A and B. And so we're going to have a really good conversation. The format of this show is funding, faith, and future tech. So we're going to introduce the funding video.
Absolutely.
Time to talk about funding.
All right, the hot topic on the market now is funding during a season, an economic season, a career season where massive tech companies are massively laying off all these employees. So you have lots of very smart people, of course, with technology and tech innovation, right? So let's get into this first topic about early stage investing and founder evaluation. I mean, what a broad topic, Sonali. What does this mean to you?
Absolutely. I have spent almost my entire life in this segment. And what is early stage investing and how do you evaluate founders are really key to what we do at Augment. When we are looking at technologies, we are really trying to see how can this new product, this new solution be embedded into these real sector workforce where they are not optional, right? They are deployed in the environment where they can have a lasting value. There's a real ROI at the end of it. And so when we are looking at early stage investing, we are trying to find opportunities where they are going to really embed themselves, or they're going to enable some things that were not possible, the workflows or the data that was there that was fragmented. They're connecting them, they're creating that data moat where these things can be deployed in a meaningful way and drive ROI. So we focus on the real sector of the economy, like hard sectors. They are complex, they are fragmented data sets. So the kind of companies we back are quite honestly trying to create value in this disjointed segment. And that's what is early stage for us. And when we look at founders in this particular segment that we're investing in, founder understanding of these critical workflows, founder understanding of these industries becomes very, very critical. So what we are looking for in a founder is that they viscerally understand what this industry needs and they can transform it in a meaningful way. We are looking for founders that can really drive scale, because when you're making an investment, the idea is this solution, this product can actually scale and be deployed across the world so everybody can benefit from them. So we need to find a founder, or we want to back a founder who had that sort of vision that this solution or this product, quite honestly, is can be deployed and serve most of the world. And the third thing, which is again very important, is a founder who understands that great companies, great products, great solutions, and this ability to impact, large industry comes with building a team and has understanding of how to construct and bring other people onto their vision. So these are the things that we pay attention to.
Yeah, that's so good. Wow, I have so many questions. And for those listening and listening later, please drop your comments in. We see some folks already joining in across all major platforms. And what I really like about what you stated was that, first of all, you've been doing this for a while. You're a seasoned investor. And so you have experience. You've looked through maybe 1,000, maybe tens of thousands of pitch decks. I mean, who can even count? So why don't we just start right there with the pitch deck? What is it that you're looking for in that pitch deck? How much time are you investing in that pitch deck? And what are some of the key things that you like immediately like drives a follow-up action after looking at a deck?
Absolutely, that's very key. You're very true. Oh, good Lord. I've always thought that, if this thing doesn't work out, maybe I'll become a pitch deck writer or something of that sort. It is
That's
really
funny.
important. That's the first communication that we receive as investors, right? And you have to very quickly drive to them the idea of what you're building, right? And who you are and why. These three things have to happen in those couple of slides. So I think over explaining something is not the purpose of a pitch deck. The pitch deck is a tool, is a document which entices other people to engage with your investors. So the things that I really look for is, why are you building this? What is the pain that you're trying to solve? And that really tells me your understanding of the industry that you're building that solution for. The second thing that I look for is that is the pain that you're solving is just for a small segment or for a very large segment and can be replicated across a large audience or across a large customer base. And the third thing that I'm quite honestly looking for is, what is your background? What drove you to this? Why did you choose this to happen? And these can be communicated in just a matter of 5 to 10 slide, quite honestly. These are the things that need to be communicated to us.
Yeah, I love that. 5 to 10 slides. I'm glad that I'm not the only one preaching this and teaching this as well and sharing this with the broader community. And a good mentor of mine once told me about 10, 20, 30. Maybe you've heard of this,
Yeah.
right?
Yes,
10
absolutely.
slides, 20 minutes, 30-point font. So
Yeah.
let's just review, what are those 5 to 10 slides that are an absolute must? What's the lean slide outline?
So, like I said, the first is, why.
Right,
What is the pain point, right, of
right.
the industry? Like this
Like, why now,
industry.
and what is the pain?
Exactly. So why now
Right,
is I think for me there are different things that drive. But an early stage, we really need to hone in and why now. That is really key. So
right.
I think just saying that this industry is, whatever is happening in there, what is the fragmentation, this is the pain point, and they're losing so much or whatever that might be, right? So that is the first step of it. The second step of it is that, what is your solution, right? So whether you have a proprietary algorithm, you have a proprietary material, or you have a proprietary way of solving this workflow, just say it exactly what you're doing. And the third part of it is that, hey, I have a lived experience, or I have worked here, or I have studied this, and therefore I'm doing this, right? So quite honestly, these are the things that are really key for me. And then your team page also comes after that, like who are the people who are behind this. And then I would say if you have early traction or engagement with customers, that would also be very helpful for an investor to sort of see that not only this team have honed in on a unique problem to solve for, but they also have customer traction that they are really interested in to deploy the solution in their environment.
Yeah, I love that perspective of the solution slide, including founder background as to why this is relevant. I'm just thinking of a very specific idea right now and a deck
Yeah.
that I'm like, oh yeah, I wonder what Sonali would think about this. So when you're thinking about those early stage investing funding decisions, what's the average check size you're typically deploying in a startup that is backed by your firm?
So we are generally the first institutional investors in most of our portfolio company. Over the last 15 years, we've backed 40 odd founders, 40 odd companies with multiple founders in some cases.
Mhm.
So really excited to be on this unique journey with each one of them when they are trying
Right.
to transform their companies. And 95% of our portfolio companies have received follow-on funding. So what makes us say yes, and what is the check size? So it really, David, it depends upon the stage of the company, the round that is being constructed, who are the other co-investors along with us. Our check size can really range from 250K to million and a half. We both lead rounds, we follow, we join syndicate. We want to work with mission-driven founders who are really trying to build solutions and products that are going to transform the real sector, make them more efficient, productive, and sustainable.
Yeah, that's wonderful. Thank you for sharing that. It's interesting when we have different guests on the show. There's all these different ranges of check sizes, and people are often curious. Okay, well, how much, and then what is those use of funds? So maybe we can narrow this down just to early stage pre-revenue in terms of use of funds. And in fact, now with technology and capital markets, people are required to be more efficient with those fundings. So, what would you say are the top one or two line items on that use of funds for an early stage company that you invest into?
So early stage companies, the number one is people, right? I mean, they are two friends or two colleagues or two
Right,
buddies or three or four or whatever, right?
right,
They're a group of individuals that have come together to build the solution, and that needs to scale. Like I said, there are many, many nice businesses. Not all of them require venture funding, but people must understand that venture business is about scaling. So if you are
right.
resistant to scaling, that is not something that, the idea of venture funding is to take the solution, this product, this technology, and really spread it around the world for everybody to benefit. So that is the purpose of venture funding, right? So you should be that way. And to do that, you require people. You require people on the engineering side. You require people on the marketing side. You need on the customer success side of it, right? So there are many functions in an organization that really have to be built up. But as an early stage investor, what are we trying to do? We, like I mentioned to you, that 95% of our portfolio companies have received follow-on funding. So there are steps to that, right? We are investing in most cases pre-revenue, maybe some pilot, NRE kind of investment. So how do we build confidence for other people to adopt this solution or this technology? So what we are looking for is getting that early customer traction. So to achieve that, what kind of people do you need, or what kind of further development in your product or solution needs to be so you hit the next milestone and you get next round of funding to further scale your business. So that's the thinking behind how we operate and how we support our founders, trying to hone in on as what's that next point of inflection for them.
I love that. And our views are popping off right now as you're talking about funding for founders and those first check sizes, which is wonderful. YouTube is doing great, and LinkedIn as well. So if you're tuning in, drop a comment. Let us know where you're tuning in from. We have Sonali here live, real, no bots allowed in this show. So please share those comments. So building on top of that, if people is the number one line item, then how do you negotiate startup salaries with people on that use of funds?
Yeah, exactly. So I think, as you know, startup salaries are based on some cash components as well as equity components to that. And the idea, as you will see, is that when you're valuing that total package, some amount of it is attributed to the equity they have in the company as well. The idea is to align interests here so that your true value will be unlocked by increasing the value of the equity. That's how most compensation packets in startup world work.
Yeah, exactly. Perfect. So let's say you have an early stage team and you have, the CEO head, you have maybe operations, and you have maybe products. So when you're thinking about a team of three, which maybe we could say just for sake of purpose of example, could be an example. How are you thinking about that equity distribution, first of all, amongst the three founders, and then more specifically, how much equity your firm wants in exchange for that first round of funding?
Yeah, so there's a whole range of possibility,
Right.
David. But just to give you sort of a rule of thumb, in most cases, every time you raise capital, you generally go from around 20% of the equity you give to your investors, generally. And the idea of venture capital is, quite honestly, is to continue to increase that pie, right? I mean, the value of your company to begin with might be $10 million. The next round could be $20 million, and subsequently 50 and 100 or whatever. So as your ownership decreases, as you get new investors, but you're increasing the pie, the value of that dilution is actually a lot more. So that is a concept that we try to, particularly young founders who are doing it for the first time and are not aware, try to make them understand. And to start with, I have seen various versions of it. If there are three partners or two partners, they can all be equal, one third, half. And then from there on, they take dilution as investors come in. But also it could be it could be different, that one individual came with an idea and then he recruited other people. So there's a lot of variation between the initial team. What is necessary in the initial team, and that's what we spend our time, is making sure there is alignment of purpose and vision, and there is clarity of what everyone's ownership is, and those are documented. The other thing that we pay attention, quite honestly, is We've been fortunate to work with diverse founder groups. 2/3 of our portfolio are diverse founders. What we really pay attention to is making sure that the teams that they recruit, making sure that everyone is compensated based on industry bands, and we are not taking, let's say, advantage of anybody because they are unaware. So as a woman founder, I pay attention that when you're recruiting women talent to your team, you're adequately compensating and giving them the right amount of equity that is necessary. So for us as a fund, when we are investing, our ownership targets range from 5 to 10%, and we generally syndicate it with somebody. So generally, at the first level, 20% equity is held by the founders, and subsequently, as you keep going through this journey, probably that number keeps decreasing and decreasing. So the next round may be like 18%, the follow-on maybe 15, and then maybe 10, and then 5. So that's how it sort of works its way.
Yeah, that's wonderful. Thank you for sharing that. Those little bits, we'll clip those up and share those out. Lots of people ask those questions. And I'm super grateful too that you're curious and interested in diverse founders, both female and culturally as well. And then, of course, that compensation band is so important. And Carta.com gives a great kind of structure for that compensation band by location. And so it's good to hear that you're interested in that. Now, your venture partner firm actually is really focused. Augment Ventures has a particular focus on Michigan and the Midwest. So, not to shout out our University of Michigan champions this year, but I'm a big Michigan fan, big Midwest guy. Why the Midwest and why Michigan particularly? That's kind of unique. We haven't had a Michigan-focused VC firm on the show yet.
Yeah, of course, go blue. It was a great sporting year for us. Michigan is very interesting, and Midwest is also, when we are talking about real sector, there's a lot of opportunity and a lot of customers in that area. To Augment Ventures originally started in Michigan, but we've been investing nationally since our inception. So about 1/3 of our portfolio company is in Michigan, Greater Midwest, and the balance are between other innovation hubs around the United States. I think the advantage that Augment has is that we have presence both in Silicon Valley, New York, Midwest, and when we work with founders, we can very uniquely connect them to talent and customers from these big hubs that are there. The other thing that I find very interesting is that the technology innovation ecosystem in Michigan and Greater Midwest is also, quite honestly, we started the firm in 15 years. The number of new startups and that are coming out of these areas is amazing. In fact, our most successful company, LlamaSoft, which was acquired by Coupa Software for $1.5 billion, was a Michigan-based company. So we've been fortunate to be part of that ecosystem and find entrepreneurs who are doing interesting and unique things. And we will continue to invest actively in the region. We have a number of very interesting opportunities in the area, and we are really fortunate to be part of them.
Nice. Let's go, Michiganders, with that 1.5 billion exit. What a claim. What a beautiful result. So as you move from early stage pre-revenue, are you also doing kind of pre-Series A and Series A investments as well? Are you doing pre-Series A or Series A investments? Because I have some questions there, but I don't want to necessarily go down that route if that's maybe you're focused on maybe early stage pre-seed.
So we are doing seed and pre-series A. David, it's an interesting concept. When I started in this
Right.
industry, we used to just have A, B, C, D, just go
Right.
nicely.
Right.
And
Yeah.
now we have
I know where you're going
pre-seed,
with this
pre-seed
one.
plus, and seed and
Right.
seed plus. I've been part of seed 12 also. So just to give you an
Right.
idea of where it is. I think fundamentally the way I think about it, like quite honestly, David, is that where is the company in their growth trajectory, right? I mean, that what is the definition of pre-seed, what is the definition of early stage, and what is the definition of A? Quite honestly, is that, have you got, so when you come to series A, you have sort of established a little bit of rinse and repeat idea. You go to B when
Right.
you have a fair amount of customer validation and you require to scale. And then from there on, various levels of scaling, right? I mean, that's how to think about it. Pre-seed is the idea where you're just doing ideation. You have friends and family and early believers in your idea, where you're trying to get to that first pilot or NRE. Seed is when you have the customer engagement, like somebody paid you to do something. When somebody pays you to take that product, take that solution in their environment, they are giving their endorsement, right? And who that first customer is, like, I often urge founders to make sure that whoever is your first customer, the idea is not so much about making money out of them, like, the economics, like ultimately everyone's going to be focused on that. But the idea is to say that you were to display, to get validation that their solution is valuable in their environment and they are willing to spend time and dollars to engage with you and to experiment with you, that this will create long-term value in their environment.
Yeah, long-term value in their environment is so key. And people often, to your point, get caught up with revenue, with customers. And yes, revenue is definitely important. But the question is, are people actually adopting your solution? Perfect example is WhatsApp when they got acquired by Facebook pre-Meta days. And
Yeah,
they paid, for 400 million users,
yeah.
active users who are actively engaged. And so that number of active users is really important. Okay, so this is really wonderful. Early stage investing and founder evaluation. I want to touch on this brief point of founder evaluation before moving to the faith side and the philosophy side. What makes good founders? How do you really get to know someone's values, their mission, their purpose? That it's aligned internally to the internal team, but also with yourself and other investors who you may be coming to the table with. There may be a crowded cap table. What qualities do you really care about most when evaluating the right founding team?
This might seem odd, but the two things that I value most is curiosity and empathy. I think if you have those two as a core, then you can really build a team, a coalition around your vision, and you can really execute on the purpose for which this company was formed, quite honestly. Then, of course, there are technical evaluations and so on and so forth. I can tell you over the years of being in the industry, most of my companies, and there have been a bunch of them that have not worked out, primarily have been because of people, that rather than, the technology was not good or there was lack of funding or anything of that sort. And we try. I wouldn't claim that I have unlocked all of it, but the way we try to evaluate quite the founders is, quite honestly, spending time with them, understanding their vision, understanding their hopes and aspirations, understanding why they're in this business, why are they doing this. Because being an entrepreneur is very, very hard. You take that risk on yourself. You have to work endless hours. It's just true. It's not a regular job. There's a lot of uncertainty. You're making many deterministic decisions on incomplete, unavailable data. And so you have to really believe in yourself and the vision to really bring everybody else along with you. So I think just understanding what is driving them and why they're doing this really helps us. And again, over the years, through our learned experience, we have understood, speaking to all the founders, speaking to doing reference checks and speaking with their colleagues, where places where they worked, or they were professors or teachers or whoever. Try to get a sense of what is driving this person to build this company, quite honestly.
Yeah, no, I love that. It's a combination of leadership and technical capability. And then those, to your point, do the values and alignment of that person, who they are, what they represent. How can I grasp quickly what that is, not just through a deck, but, meeting in person ideally, but, on Zooms and virtually and things like that. So yeah, absolutely love that. All right, well, we're going to transition to
One more thing I would
Oh yeah,
say,
go ahead.
David, is that when I was a very young professional myself, one of my mentors had mentioned to me that value creation, focus on creating value in everything that you do, quite honestly, and that has stayed with me. And I really seek founders like that, because everything else sort of falls around it, like growth, customer, and they have to be completely focused on making sure that their customers are delighted. So that is something that I try to spend time on.
Yeah. Yeah. Delighting customers. If you have angry customers, it doesn't matter what your values are or who your founders are or what the background is. No, I really appreciate that. That's actually a really great segue into our second segment, which is all about faith. So we're going to go ahead and play that faith video now.
Focusing on faith for a moment.
Faith on this show consists of values, belief systems, yes, some religion, but more about the values and the philosophy that goes into building a company, building an investment team, and really delivering value to your customers. So, leadership philosophy, let's just start there, Sonali. What is your leadership philosophy?
I think I alluded to that in my previous segment. I think my leadership philosophy is really creating value and through investments. So I really believe that how we allocate capital, who we allocate capital to, and what changes we are bringing about in the world, quite honestly, is a reflection of what our philosophy of investing is, what our philosophy of leadership is. Our philosophy of leadership is inclusive and giving ability to everybody to rise up and deliver to their full potential.
Yeah, creating value in industry. Let's apply this now to real, right? So we're talking about real physical industrial types of companies that you're kind of lighting up with AI. So how does leadership in that portfolio apply to the real industry?
Exactly. So as I mentioned, where we are investing is, these leaders, these mission-driven founders that we are backing, come with an idea or understanding of how can this product or solution be embedded in the workflow and not be optional? How can the solutions really drive ROI? Can these solutions be system of records on
Mhm.
which they will build future value? So those are the kind of companies that we are backing, and those are the kind of founders we are backing. And what happens when this physical world becomes more productive, sustainable, and profitable, right? It employs more people. It delivers growth with delivers good with lower carbon footprint. It delivers solutions that are more useful to the broader society. So I think that in a way we are investing in B2B and real sector, but this sector is the engine of the world, engine of the economy.
Yeah, right. I appreciate you sharing that, and I think that's actually the real sector in terms of like industrial. Like maybe let's just lean in just a little bit here for purposes of the replay and audience who will watch this later, because that's also very important. So help me understand kind of what part of the industry you're seeing some real traction and where you're investing in terms of. Are you talking about like robotics? Are you talking about industrial? Are you talking about manufacturing? Maybe all the above? Help us understand how you're making those valuable investments, A, to return value to your own stakeholders and your company's pockets, but also to really make a real change in the world. What industries
Abs-
what specific areas are you focusing?
Absolutely, we are definitely investing in manufacturing. We are definitely investing in supply chain, which is a massive footprint, as you must have, everyone has realized through the COVID days, and even now disruption in supply chain, how important it is. And so why are we investing in these kind of sectors is a question, right? So for example, particularly now with AI, it has become possible to collect data and make meaning from this fragmented and complex environment and drive change. So we've invested in a company that basically, tries to reduce industrial waste, inline manufacturing. What is the impact of that, right? The impact of that is that when there are defects in a manufacturing process, all of that goes to industrial waste. That's a massive carbon footprint. By increasing profitability for this manufacturing unit, they are making sure that this is a sustainable business. We are investing in opportunities that are around healthcare. Again, healthcare is a great platform where there are disparate data sets and disparate information systems. And how do you bring all of these together to really bend the cost curve of care? We have invested in a number of healthcare opportunities where the concept or the main idea is connecting caregivers or connecting data systems to really bend the cost of care. So these are the kind of places where we are investing. So the real economy is a massive footprint. So we are investing in all of them. The thing that we are sort of not investing in is that we are a software focused fund. So we primarily invest in solutions and products that are primarily software oriented, that are transforming the physical world. So that is how I would describe it. So we are not investing in drug development or devices or robotics per se, but we are investing in robotics, wherein the software is the security layer, or it's the world models or things like that. So that is where we are spending our time. Sorry, David.
Sorry about that. So now that we're talking about software, let's talk about data. So data is so important, especially in decision making, and leaders make decisions, right? And even it's sometimes with incomplete data. So I guess the question is for you, when the data is incomplete and the stakes are really high, what principles guide your decisions?
Yeah. So for the companies that we invest in, quite honestly, they are trying to solve for incomplete data in a deterministic physical environment. And therefore, it is exciting to see some of the portfolio companies that we have, how they are connecting these data sets and trying to create that decision intelligence layer in this hard, complex environment to enable decision. Now, switching back to us, how when we invest, because when we are investing, we have to really triangulate between where the industry is going, where the opportunity is, where the founder is, where is the state of the product, and what is the customer engagement, right? And quite honestly, this is where the founder vision and founder confidence sort of bridges the gap between data available, hard data available. So, I come from banking and hard sector, where we ran complex models, and you could do all kinds of calculations. Early stage is really about trying to understand the vision and the transformation. If this thing worked, would it really move the needle? Would there be ROI? Would it fundamentally become the new system of records? Would it fundamentally change this industry and make it more efficient, productive, and sustainable? So those are the things sort of you triangulate, to bridge the unavailable data for investing.
Yeah, no, I like that. Now, tying this to concierge, I read your newsletter for April, which is wonderful. So backing something that changes human behavior like concierge requires a different kind of a belief, right? So what anchored that decision for a concierge?
So again, it was a concept of like in today's environment, like how websites used to be SEO optimized and things like that, and with the concept of Chat GPT, we don't want to be fed information; we want to seek it. So what is Concierge doing? It's enabling different kinds of yeah, e-commerce and B2B sites. When a customer is coming and engaging with you, that is what they are creating a platform where the customer can do the discovery and turn into it. That information is being tracked and recorded and then connecting into the CRMs of various companies, and they can more proactively and more appropriately solve for their customer questions and requests. So that is the vision of Concierge. And so it is in recognizing how people and even B2B customers are engaging with the products and solutions they are seeking. And so what really converted us to them again is the background of the founders that they came from.
Yeah, no, I like that. And so now that we're talking about data and decision making, especially now you're paralleling that with your customer relationship management tool. So now you know your customers better and you're able to serve them. But I'm curious, have you ever followed maybe your convictions against what the data is saying? And what role does your character play in some of those longer term decisions and outcomes that might not actually be backed by data?
Um, I think when you are investing, particularly in a completely new technology, and
Yeah.
where nothing exists, nothing parallel exists, and quite honestly, in most cases, you are investing into a company where nothing existed. So actually, you're doing that quite constantly on a regular basis. Like nothing existed here, now it was a zero, and now it is 100, right? And so you have to dig deep within your own investment thesis. So for us at Augment Ventures, we spend a fair amount of time thinking about the ability and capabilities of new innovations, how they will transform, how they can transfer the real sector, and where the next opportunity might appear. Different things will have a huge impact. So sometimes when there are incomplete data, but your background research tells you that this industry is on the cusp of transformation, or there are systemic failures at various points because of certain things not being able to be done. In that case, you will say, okay, we don't have enough proof points as of now, or this solution or this product hasn't been deployed in the environment yet. But if this trajectory continues and they are able to scale and deploy it in the environment, they will have a transformative effect on this sector, this industry, or whatever that might be. So I think that is where you have to rely on your analysis and and just to be honest, sometimes you're wrong. So that's also part of the journey.
Right. Yeah, sometimes you're wrong, and that's an opportunity to learn and course correct and
Yeah.
make better decisions. I like that. Okay, well, we are progressing nicely. This is so wonderful. If you're tuning in for the first time, we have a wonderful guest with us on the show today, and we're going to get right into our final topic of future. So let's play that intro video for future.
Let's talk about quantum and the future of technology.
All right, so we're here with a special guest, and we're talking about rebuilding the real economy with AI from infrastructure to interface. Sonali, welcome to the show and the stage. I'm curious to hear, how are you integrating AI into infrastructure?
We are very exciting times these days. I've seen many innovation waves come and transform how we live, work, and play. I think AI is going to be transformational in all of our lives, and it has the capability of, improving the industrial environment, the consumer environment. In that process, there is going to be some churn for sure. And we want to make sure that we understand the capabilities and power of AI, and we take everybody along with us so we can build a better future for all of us all across the globe. I think what is happening, where we are spending most of our time, is AI is changing from analysis and dashboards into execution. So AI is going from analysis to action. That is where we are seeing transformation. That is where we think that the humans or the people that are involved in this industry are going to play a very, very important role to make sure that we are designing products and solutions that serve us. So I think I'm really excited about the future. Every day I see new applications, new solutions. I also see a lot of attention being paid to ethics and responsibility. We are also seeing a lot of players trying to make sure that these solutions that we are introducing in all kinds of environment, whether it be retail environment or industrial environment, are built up with guardrails and ethics embedded in them. So that encourages me, and that is something that we spend a fair amount of time making sure the solutions that we are introducing into these environments have that understanding and capabilities of what ethical operations mean and what productivity means.
Yeah, I love that perspective. I focus and contribute to an organization called AI and Faith that takes the ethics first and morals first approach, bringing together all of the world's wisdom to apply it into tech innovation. So that resonates with me for sure. And we have a comment here. I'm going to read this because this is a really good question for those who are listening on audio. I'll just go ahead and read it. And our guest here, by the way, if you want your name to show up on the comments, you do need to click opt into the data when you click join the event. But we have a LinkedIn user saying, I'm curious about how you think about moats with the ability to make software essentially democratized by Claude Code, where does a founder find a moat? For example, proprietary data, brand or trust, or speed to market, et cetera, all potential moats. Is there anything else you would add to create a moat in a startup? What a good question.
It is. And, as an active investor, we are constantly, will Claude be releasing, or Anthropic will, or OpenAI, or someone else, one of these hyperscalers, be releasing something that will destroy this business. And that is why we focus pretty extensively on, and I'm sure everyone's heard about this, that this is a AI wrapper, as we call it. But we've spent a fair amount of time trying to understand how the solution or this product is not just a wrapper of AI, but actually trying to do things that were not possible before. So that is a moat. That I talked about it earlier, that we invest with founders who really understand the workflows and a deep understanding of the industry. So they are building products and solutions that are quite honestly, doing things that cannot be done. And another thing is, Claude Code and all these solutions are coming out. But in an enterprise environment where they have thousands of workers and they are producing millions of units of whatever they are building, right? There needs to be consistency in delivery and deliver that system. So all of that cannot be done by an individual worker in that environment. These are systems and solutions that have to be managed to make sure there is continuity and consistency. So I think the moat, quite honestly, is people understanding the real sector where we are spending most of the time, like supply chain, industrial systems, energy, and healthcare, what are the existing workflows that can be enabled or enhanced by using the new platform.
Right. Yeah, I really like that moat. Can you do something that was previously impossible and make it possible? I'm reminded of a little proverb that says, like, all things are possible with God. That word
Yeah.
God's like the divine. So, sometimes I even am reminded of us as kids, we have such an imagination, as such a anything is possible mentality. And so that is a really great moat. Okay, final question before we go into our last two segments, which is this. This is the future segment, right? We want to think more broadly, more timeless. So, since you're focusing on AI and technology in these critical industries, I'm curious, what does this world look like when all of those systems are really fully transformed? And I hear you say supply chain, so I'm thinking like autonomous shipping. I hear you say healthcare, so I'm thinking about biotech and the future of technology inside the body, and of course other real focuses as well from a software and implementation perspective. So it paint that real visionary picture for maybe what the world will look like in 10 or 20 years in these real industries.
Oh, that's a fascinating question. I think in 10 to 15 years, my vision is that, we will have enough power to power our decision intelligence platform where the cognitive burden would be reduced for people operating in these complex industries. There will be less industrial waste. We'll be more efficient with our sourcing and resources that we put into each product. We'll have abundance of capital to make sure that we are able to provide healthcare to everybody. We would have bent the cost curve where inefficiencies are eating away at the capital that we are putting into this healthcare system. Care would be more easily available. Probably accelerating drug development, by having synthetic models do these clinical trials. So, 10 to 15 years, I think the rate at which we will be finding new solutions or new drugs to combat all kind of illnesses would be a lot higher. So I think that is the kind of vision that I have, and the vision that I have also is there is a fair amount of skepticism about future of work. I think and what people will be doing for living. I think the ability when this cognitive burden of doing everyday chores is lifted, I think it will unleash creativity, and we quite honestly don't know what the creative mind will do. I mean, if you go back, I love history. If you go back to quite honestly, when the first steam engine was built, like, did we think that we'd put a man on the moon? No. So
Right.
I just think that the possibilities are endless. But I'm an optimist, and I think the humanity will be better at a better place with less disease, more sustainable growth, and people will be coming out with more creative ideas to create a better world.
I love that. That's incredible. Yeah, we have more power. We have more efficient power. We're now all these kind of more menial, lower level tasks are automated. We have access and sustainable access to healthcare. And so we're actually able to be more creative with our mind share because, kind of the technology is really performing in the way that it needs to. So I love that. All right, we're going to transition to my favorite segment now, which is Beyond the Bag. Let's play that intro reel. Beyond the bag, beyond the bag, beyond the bag. All right, we are just so curious, Sonali. What do you carry around with you in your bag for people who travel? Just something that you cannot live without.
Well, I definitely travel with my AirPods because I love to listen to podcasts, and I love to listen to to books. But more importantly,
Nice.
I'm always shuttling from place to place, so I carry a energy bar
Nice.
to fuel my body at times.
Yeah, that's awesome. So, just one follow-up question. Any favorite books, podcasts, or energy bars? Or if you know all three, great, but just one is fine too. I'm curious. What is your favorite podcast or energy bar?
Well, Tosi is my, I have it on my table right now. No, I'm not getting paid for this, by the way, but uh, this is one of my favorite
Nice.
crunchy, nutty bar that I love. And quite honestly, I do enjoy the Dwarkesh podcast. I think he does a good job of delivering what is happening at the cutting edge of technology.
Yeah, wonderful. Well, today I'm sharing that I just have a permanent marker and a note card. I travel primarily with a 15-liter bag all over the world. I've been to also all 50 states. And so you never realize how important sometimes just one marker and one note card in the midst of this technology world. It's like there's this beautiful kinesthetic art in just writing something down in big, bold letters. Well, this has been such a pleasure chatting with you. I hope that our hundreds of guests that were able to pop in today and the thousands of replays afterwards will find some incredible value. Now, you've offered to get connected with people. So, what is the best way for people to get connected with you? And who are you typically looking to meet? And how can they meet you?
Absolutely. Thank you, David. Definitely, follow us on LinkedIn. Connect me with on LinkedIn. If you're a founder, please reach out to me via LinkedIn and share what you're building. We are actively deploying capital at this point. And if you are interested in learning more about venture capital or want to be an investor, please reach out to us as well. We spend a fair amount of time making sure we educate everybody on what venture capital is and how to invest in venture capital and how to become young venture capitalists themselves.
Wonderful. I love that. You are all in on LinkedIn. I think you're the first guest who said LinkedIn, LinkedIn, LinkedIn three times in 3 seconds. So that is so wonderful. It was a pleasure having you on the show today.
Thank you so much, David. I appreciate the opportunity. Thank you.
All right, folks, thank you so much for tuning in. Please like and subscribe on YouTube. Check us out on Spotify as well. We're live every week. Signing off, The David Daily Show.